Good morning, everyone. Welcome to the Phillip Security Research Monday 11 a.m. call. Today, we have updates on SAT, followed by technical analysis and our Singapore REITs monthly macro outlook. Just a quick disclaimer before we start. Every information provided in this seminar is for educational purpose only and should not be taken as financial advice. Without hesitation, I will hand the time over to Hashim. Thank you.
Thanks, Sui. I'll be going through SATS update. Next slide. Next slide, please. Can you hear me? Sui, I'm not able to see the slides. I'm not sure if it's just me.
Those.
Okay. So, SATS has successfully transformed itself into a global air cargo platform after the acquisition of WFS. And this has brought together with it new contract wins, which are more global in nature, focused in areas such as Europe and the Americas. So in FY23, before the WFS acquisition, markets excluding Singapore represented just 20% of SATS revenue, which is quite a small portion. So fast forward to FY25, and that number has surged to 65%. So SATS is no longer just a Singapore story. It's a global operation with a significant presence around the world. So what's particularly interesting is the quality of contracts. So SATS has secured at least 20 new contracts and renewals in FY25 and 26 alone. And these aren't small project-based deals, but rather network-wide cargo handling contracts with major global carriers. Some contract wins for last year were with Air India for global cargo and ground handling, Riyadh Air in Saudi Arabia, Turkish Airlines across multiple US locations, other firms such as Emirates Sky Cargo, Cathay Cargo, and Saudi Air Cargo. So these are multi-year contracts that provide a stable recurring revenue across multiple years. So apart from their new customer wins, SATS has been able to deal with trade tensions and volatility better than competitors due to their global operation. With the removal of the de minimis exemption, retailers like Amazon are shifting from direct to consumer, international shipping to more US-based warehousing. So this means more domestic freight movement within the US. So SATS is well positioned to capture this demand. Secondly, international shipments are shifting from small parcels to consolidated orders. So SATS stated that this is more cost effective for them as it reduces manpower costs while handling similar volumes. We think SATS is more agile than competitors when it comes to redeploying capacity. So when China-US cargo tonnages dropped 8% year on year in November 25, China-Europe routes grew 8%. So SATS is able to redeploy their capacity to where demand is strongest because of their extensive network. And we think there may be a rollback of trade tariffs ahead of the US midterm elections. So if this happens, we could see a meaningful surge in air cargo volumes to the Americas, so providing a significant boost to SATS operations. With that, we downgrade to a neutral recommendation with a TP of $3.84. Thank you. I'll pass my time to Darren.
Yeah, thanks, Hashim. Yeah, so run through Singapore each monthly, but this was quite dated because of the year-end holidays. So this report was published last year. Yeah, so the title is is poised for growth for 2026. So that is extremely likely as we all know the interest rates have really fallen, especially rates in Singapore. Like the 3 month SORA year on year is down over 200 basis points. Like now it's at 1.2%. So it's very, very low. And a lot of the REITs, especially with the SGD denominated loans, they benefit the most from these very low 3-month SORA, as SORA is the base rate that they use. So later I'll have a chart on that. But first of all, this is just the share price performance of S-REITs. 2025 compared to 2024. So you see 2024, all the REITs were basically down, and 2025, S-REITs made a rebound. So for the whole of 2025, it's up 10.6%. So that is the pure share price action, 10.6%. If you take into account total return, which includes the dividends, it's about closer to 16% returns. So that is compared to the share price movement in 2024, where the price alone was down almost 12%, and if you count for total return, it's down about 6%. Yeah, so going forward, despite this recent rally, or rather the rally in 2025, we still see tailwinds for S-REITs, especially since the more interest rates are expected to come. Our house view right now is that we're expecting 2 Fed rate cuts, so that will translate to lower rates to Singapore as well. So the best performer for 2025 is commercial. Go back to the slides. So we see it's up 21.8%. So that's mainly driven by a lot of the Singapore REITs, Singapore diversified REITs, which are like CICT, OUE, Suntec. So these are the REITs that have retail and office presence in Singapore. So these are the ones that were the outperformers in 2025. Next slide, please. So moving to the dividend yield spread. So these are the monthly indicators that we keep monitoring, because these are important trackers. So first of all, this dividend yield spread is the forward dividend yield of Singapore S-REITs, or rather S-REITs over the 10-year Singapore the government bond yield. So the difference is called the dividend yield spread. So basically, this chart, it shows how much investors are being compensated yield-wise investing in S-REITs over the Singapore government bond yield, or you can see there's a risk-free rate proxy. So since 2024, or rather since 2023, when it hit its bottom, it's been trending upwards. Going forward, we expect this to continue trending upwards from lower interest rates, which will affect the 10-year bond yield. So the bond will continue to decline with lower rates, and the fact that with lower interest rates, S-REITs will likely pose that the chances of DPU growth are higher. So as the absolute number of DPU increases and as the bond yield continues to decline, so this spread will continue to widen. So this will make S-REITs increasingly attractive as a yield play as compared to other fixed income instruments, like your bond yield or your 10-year SGS or whatnot. So this chart on the right, basically this table is as of November, but right now it's fallen even further. 3-month SORA is like 1.9. So year on year is down like 200 basis points. So we expect this to translate to more interest rate savings for a lot of the REITs. Next slide, please. So if you take a look at this chart, this is just a compilation of all the, or rather most of the S-REITs in Singapore. I mean, so it's a bit small because there's the list is quite comprehensive, so there's a lot of S-REITs there, like 30 over. So you see year on year about or even more than 70% of S-REITs has already experienced year on year lower interest rate costs. So that's as of the third quarter of 2025. So third quarter 2025 versus third quarter 2024, we see a lot of REITs like if you count City Hospitality Trust, Faiz Hospitality, and OUE, so these 3 REITs have kind of the lowest fixed ratio, which is why they experience the largest year-on-year decline. So their income, or rather the loans that are on fixed rates, ranges from 40 to 65% for these 3 REITs. As an industry, for the industry as a whole, all these companies together, the average is about 72% of their loans that are hedged to fixed rate. So it's fallen from previously during the high interest rate environment was around 80. So now that it's fallen, the REIT index as a whole, most REITs as a whole will continue to benefit from a higher portion of floating rate loans. So that will translate to lower interest rates and lower interest expenses going forward. And as a result, DPU growth is largely expected for most REITs in 2026. So for 2025, we're also expecting at least 50% of the S-REITs to benefit from DPU growth already, like in second half 2025, but 2026, most of the REITs will flow through, as almost all of the REITs by 2026 would have already already repriced the very low interest rate hedges that they put in place before, or rather during 2020 when the rates were almost zero. So after they reprice that, then basically the rates have already risen. So going forward, we'll trend down further. Yeah, next slide, please. Yeah. So next is the forward dividend yield. So this was a chart that we used earlier, forward dividend yield minus the 10-year government bond yield. So the forward dividend yield, it fell over the past few months, but that's mainly because of the share price performance, and the share price really rallied. So going forward, we expect, assuming the share prices of which remain constant, and the absolute number of DPU will increase, like I mentioned earlier, from lower interest rates mainly and stable operating performance. And like rental escalation, rental positive rent reversions and such. And we expect for dividend yield to improve from these levels, assuming, of course, the price of REITs remain constant. And next is the price to NAV. So now it's trading very close to the historical mean of about 1.03 times, just slightly under. So we still think even at this price, we still think there is room for growth, especially since the potential for NAV itself, NAV per share itself, is likely to increase from the fact that if lower interest rates, cap rates are likely to compress, and with that happening, property valuations are likely to increase, and with the higher NAV per share, we think that there is still room for our price to NAV to continue to trend upwards. As well as the fact that there are tailwinds like low interest rates. Next slide, please. So this is just we move on to our retail subsector. So retail subsector is still the subsector that we favor the most of all. So first of all, for retail sales, we see retail sales over the past few months has been trending up. So you see there's a pickup at 2025. So year-on-year is up 3.7% in October. Going forward, we expect these retail sales will continue to improve, or rather continue trending up, like you see here, mainly because of few reasons. One of it is population growth. Another is wage growth as well. And at the start of the year, we've already gotten another tranche of the CDC vouchers, so that will continue to benefit retail sales. Like last year, we saw like 4 billion from this CDC vouchers, actually 60 vouchers as well paid out. So this will continue to help boost retail sales, as well as the fact that the international visitor arrivals, as of now, we are forecasting that it will likely hit pre-COVID levels by this year, 2026. So last year, we think it fell short by a little bit for pre-COVID levels, but this year we expect a recovery. So all these will help to boost, or rather support tenant retail sales growth, as well as tenant sales growth. This retail sales growth would translate to tenant sales growth for a lot of the S-REITs. Like 9 months 2025, we saw a lot of these tenant sales grew by 2 to 5%. So that is similar to what we see here. And rental growth is also supported by the low, below historical average occupancy costs, as well as limited incoming supply. Over the next 3 months next 3 years or so, the private incoming new supply for retail is about 2.4% of the whole current stock. So that is still quite muted. So there is still room for retail to grow, as well as the fact that there are still a lot of overseas brands that are trying to set up shop in Singapore, expanding here. Past few years, there was a wave of Chinese F&B brands coming to Singapore, but or rather more recent times, we are seeing Chinese beauty and wellness brands as well coming to Singapore. So these are some examples of the strong demand that we see. Yeah, next slide, please. And yeah, so for this is the hospitality sector. Yeah, so for the hotel RevPAR and visitor arrivals, you see the so I mean the 2025 numbers are not out yet. So as of 2020 November, we saw visitor arrivals up 4.8%. So that's a good sign. In November, there off the top of my head, there weren't many significant events. But in October was the one that was a standout. So in October, we saw visitor arrivals really shoot up, as well as the fact that RevPAR also jumped up close to 20%. That's mainly because of the F1. So F1 took place in September in 2024, but it shifted to October in 2025. So that was why we saw like 3.5 percentage point increase in hotel occupancy, as well as the fact that hotel ADRs were up 13.9% for the month. If you just take a look at the during the F1 period itself, yeah, the rates were probably 30 to 50% higher. Yeah, so going forward, there are some events in Singapore in 2026, like there's a Rugby World Championship. I just slip my mind what it's called. And as well as like the Singapore Air Show. So these will help to kind of support the RevPAR in 2026. Yeah. But one thing to note is that the average daily room rates have already surpassed pre-COVID levels by about 20 to 30%. Yeah, so that's a good sign. Next slide, please. Yeah, so we'll just end off with this chart that we have. So this is our stock coverage as of the end of 2025 and our recommendations. Yeah, thanks. I'll hand over the time now to Zane.
Thanks, Darren. Good morning, everyone. I'll move on to the technicals. Yeah. So first slide on the S&P 500. Last week was down about 1%. On the charts, I think it's just continuing on a range-bound consolidation that we are seeing since the start of November. Last week we tested the 6,920 level and then a slight pullback afterwards, with a retest of the uptrend channel resistance breakdown, also facing some resistance from there as well. So I think for this week we are likely to see some sort of a continued sideways consolidation. Good thing is that higher swing lows still being formed along the way, and it's just seeing whether can break out the 6,920 area. Yeah, so in general now I would say resistance is at 6,875 to 6,920, and support is likely to be at 6,720 to about 6,800 area. So 6,720 is a swing low, and then 6,800 is the green line, the 50 SMA level. Yeah, and the blue line is just 100 SMA for reference. Next slide. Yeah, so next one is on the Hang Seng Tech Index. So I think that the uptrend is set to resume for the Hang Seng Tech Index after a 20% pullback since the start of October. So overall, we think that look from the chart, the double bottom has been formed at the 5,362 level in December. And then last Friday, there was also a breakout of this downwards resistance line and a couple of a bullish divergence on the MACD when the double bottom was formed. So we think that's positive for a rebound from this 20% pullback. So first resistance level to look at will be around 6,195. So that's a swing high level formed just before November last year. And then looking at Fibonacci retracement levels, that's also a 61.8%. If you take the swing high at October and the swing low in December. And then the second resistance level you could do a retest would be the previous high at 6,715. Next slide. Yeah, so with that, we have a technical buy recommendation for the Hang Seng Tech ETF, HST. at 92.3 cents. Take profit levels at $1.01 as well as $1.88, with a stop loss at 88 cents. Last close on Friday was 92.3 cents. Next slide. So moving on, we have our ETF monthly for December. So our title is that oil and Hang Seng Index are likely to outperform in a lackluster January. So in terms of looking at the December performance for the various asset classes, it was quite mixed. So we can see that the top performers were actually the ETFs tracking gold as well as Singapore equities, which was up 2.3% as well as 2.2%. And then the top loser was the ETF tracking oil, which slumped 5.1%. In terms of the current trends, I would say most of them are currently in the range consolidation. That being the ETFs tracking S&P 500, US Treasury bonds, oil, as well as Hang Seng Index. For the ETFs tracking gold as well as Singapore equities, we think that they are in an uptrend. And then conversely, for ETF tracking Bitcoin is currently in a downtrend. So for outlook for this month, we think that ETFs tracking oil as well as Hang Seng Index are likely to rebound and lead the asset classes. And most of them are likely to do some range consolidation, that being the S&P 500, Bitcoin as well as Singapore equities. And then for the ETFs tracking US Treasury bonds and gold, we could see some pullback this month. Next slide. Yeah, so that's all for us. I think we can move on to Q&A. Thanks.
Hi. Yeah. Thanks for the questions. Can take on some. Yeah. The first question is we heard by being neither here or there for the past few months. Yeah. So I think for WeHer, we released an update report this morning. So there's there's a sort of a update on the status of the stock itself. Yeah. So just to reiterate for WeHer, the main drivers will be the increase in, the spike in construction order book. So last year, because they won 2 HDB BTO orders, so now its order book is about 629 million. So it's going to support the construction segment. Secondly, the worker dormitory segment, we are also expecting an additional 47% increase in bed capacity. So that will also be the drivers for the recurring revenue for WeHer. And last but not least, WeHer has also ongoing pipelines. So we do believe that will continue to support their share price. So for example, some of their pipelines include the partnership with Araves and Hilton to come up with the hotel this year. So WeHer is in charge of management of the hotel, so they only have a stake, but they are not involved in the day-to-day management. Yeah, so day-to-day management will be to its partners. And they also secured the land parcel previously last year in Upper Thomson. So there is about 640 million worth of land parcel. So the development details are not out yet, but we do think that this will also support their future revenue and growth. So we heard there's several drivers going for these stocks, and we do think that their share price is still being supported by these drivers. Yeah. Okay. Yeah, so hopefully that gives you some clarity. Next question. What can we expect from the upcoming CES for NVIDIA, AMD, and Intel? Yeah, so for in terms of CES itself, usually just to give people some context, it is a very big tech show held in Las Vegas. Usually at the start of the year, start of January itself. So the companies will go to the events itself and present on the developments of their technology. So for example, last year NVIDIA presented on how their chips will drive autonomous vehicles. So they tried to pitch that as their major growth driver, but because autonomous vehicle is still a very small component of their revenue, which is like less than 2% currently. So uh it's not very material. Yeah, so it's based on historical trends, the CES tech show, it may generate some movements, but also not that material movements in the stock prices itself. Maybe about 5 to 6% movements in AMD and Nvidia's share prices for the last 2 years. Yeah, so I think if you're a long-term investor, you shouldn't bank on this CES show to make your financial decisions. Ultimately, it's how the company is the company's core technology and how it stands against its competitors. Yeah, so hopefully that gives some insights. Uh, there's a question on Micron. It is now 310 or something. Yeah, about 300 plus. Will it still be a buy? Their next quarter reporting is in February, right? We currently don't cover Micron, so we we are unable to advise is it a buy or not. But yeah, for Micron's next earnings itself is in February lah. I think it's expected to be uh I think I can update you on the exact date soon again, but yeah, it's somewhere in the middle of February. Yeah. I do think that I'm still quite positive on Micron because uh even though their share price has went up by about um I think over the past month about 10 plus percent, um their PE ratio is still about 15 to 16. So I think it's still quite undervalued as compared to Nvidia and AMD's share price. Even though they are ultimately selling different things. But I do think that Nvidia and AMD can be used as fair comparables to Micron itself. Yeah. So Nvidia is trading about 35 times PE. AMD is about 50 times PE. Yeah, so compared to Micron currently, I do think that it is still undervalued. Yeah. Why is Franken lagging when ASML made new highs? Yeah. I think because Franken did update, and we also published in our report about Franken that uh ASML has changed their ordering schedule with Franken. So Franken has delivered the the components for the high-end EUV chips to ASML. And so now we are waiting for the high-end EUV to ramp. Uh, we do think that it will be at the second half of this year itself. Um, so currently the first half will be like a sort of like a lull period where we are still waiting for ASML to confirm the orders and the transition phase before the ramp itself. Yeah. So even though ASML stock may make new highs, but in terms of ASML orders to Franken, we do think that there will be a slight drop in orders from ASML itself. So that may explain why Franken's stock price doesn't really follow ASML stock price. Yeah. Is Nvidia's acquisition of Grok good? Yeah. So just to give some context, it is a non-exclusive acquisition, so which means that um uh after the acquisition itself, it is a 20 billion acquisition. So after the acquisition itself, Grok uh, it, it's not really like a full acquisition whereby Grok will be absorbed into Nvidia itself. But what it means is Grok will still operate as an independent entity. Uh, and Nvidia would not have to carry the risk of integration of Grok's employees and as well as the management. So Nvidia is able to tap on Grok's technology as well as the uh, employees' knowledge, even though they don't have to absorb the entire Grok's entity into itself. So I think that this is a good news for Nvidia because Nvidia don't need to take on the acquisition risk for Grok, and they are able to also tap on Grok's technology. Yeah. Okay. I think I hand over to my other colleagues first. Thanks.
Hey, thanks, Iqbal. Let me just take on a few questions. There's two for me. Hold on, let me find it. Okay, one's asking, what's my take on Tesla's latest deliveries? It's quite expected. So I already did, say this when they came out with the third quarter deliveries and their earnings as well. So anyway, for the fourth quarter, for those who are not aware, for fourth quarter, the deliveries were down. So it was down by 16% year-on-year. And the production was also down by 5% year-on-year. So the only thing that was a positive was actually their energy storage, which was up around 30%. It's called average, I guess, average growth. They were looking at 80% growth the previous quarter. So it fluctuates quite a bit, but it's the only, I think, positive news that is coming out of Tesla's results, or any results that they release. So the main reason why I kept saying that we would expect a decline in the fourth quarter was because of the expiry of the EV tax credits, right? The $7,500 in end September. So at the end of third quarter, there was this expiry of the EV tax credits in the US, and it's still Tesla's biggest market. And that's the main reason why deliveries, sales were so good in the third quarter, is because a lot of the customers were rushing to buy a car to make use of this expiring EV tax credit, right? It's like getting free $7,500, and then next month you have to pay that amount more for almost exactly the same car, right? And then Tesla came out to try to combat that by having a budget model, which was only $5,000 cheaper, and it had a lot of the bells and whistles that were not there for the normal standard non-budget car. And it wasn't very well received because you have to pay $2,500 more for a lousier car, basically. So sales were down. We believe that a lot of their customers actually went to competitors. In the US, competitors can be like Kia, Hyundai, Ford, those kind of competitors. And in Europe, they don't have this EV tax credit thing. But what's happening is that the BYD is coming. Growth is still very big in Europe, right? In other countries, and of course in China as well. So that's my take on their latest deliveries. It's expected that it will decline, and I think the decline is sort of a bit lower than what we were looking at, but I think it will just continue to decline in the next year as well, because they are not really improving or reinventing any new models. They're just coming out with like lower budget models. They can't compete on price as much as the Chinese cars, or even the other brands, like the Korean brands, or even the local US car companies are also coming out with better quality cars, because they are effectively just car companies. They are doing EV cars. Okay, this question here: can Singapore banks continue to rally this year? So we believe that they will be able to. I think the main key points for this year would be the NIM compression will continue, right? We will see NIMs, they are guiding for our margins to decline by another 5 basis points in this year, really because that the further continued cuts in the Fed rates, which will, the impact is not as big anymore on Singapore interest rates, but the lower interest rate environment in Singapore will continue. But then again, this will be offset by the back loans growth recovery, and also the fee income will be the main thing that will be propping up the earnings. So we are seeing fee income surging quite well in 2025, and in 2026 we expect similar growth because of the lower interest rate environment. A lot of customers, a lot of people are moving funds away from fixed deposits, and then putting it to good use now, I guess, because of the lower interest rate environment. So this will sort the loans growth, deposit growth, the current account growth, and the fee income growth will offset this decline in margin compression. But we believe the main focus of the banks in 2026 will really be the capital returns. So DBS is the only bank that has continued to guide the capital return plan until 2027. They said that it will be continuing it for next 2 years now, 2026, 2027. And they also will have the ordinary step-up dividend, right? It's really to just make use of the excess capital that they have. But there's a lot of upside surprise to both OCBC and UOB. We believe UOB is a lower chance that they will continue to give more capital returns back, because their main focus now is really on their improving their coverage ratios, right? So, and then a lot of their allowances also. So their focus is really there for now. So we don't believe that they will be having any. There's a lower chance that they will be giving an update to their capital return plan. But if DBS has done it already, the next one will be OCBC. So OCBC's results were pretty good in the third quarter, right? Fee income surged, and it was even faster than DBS. And they also have a lot of capital left. So they have around 1 billion of capital. No, sorry, 2.7 billion, or 1% of their excess capital. And then if you look at how much they can return back, that's around 70 plus cents, right? Their dividend is only $1 plus, 1 plus, right? So they can give back 70% more, and they still have they will only just be able to meet their optimal CET1. And that's not even counting in the fact that their retained earnings will continue to prop up their capital, right? So the fact that they can return 70% more, right, and not even hit their CET1, below their optimal level, right, it shows that they actually have a lot of excess capital. We believe that the last quarter they didn't really announce anything. It was because they had the handover of the CEO, and handing over, Helen stepped down and the CEO stepped in. So I don't think she wanted to announce anything. So now with the new CEO coming in on board, we believe that there's a high chance that they might announce something in the fourth quarter results. Yeah. So in terms of which banks do we prefer, we like DBS because they have the clearest dividend policy, and also they give a lot of clarity on how much they're going to give back to investors, and also OCBC because they have very fast wealth management growth, and there's a lot of upside surprise to their excess capital, and we believe that they could be announcing something soon. Yeah, so that's for the banks. Let me see whether I have any other questions. Yeah, okay, one more here from CK. Yeah. When will DBS announce the additional 6 cents per quarter for fourth quarter 2025 on top of what they paid in first quarter, second quarter, and third quarter? And how will this impact DBS share price? Yeah, good question. So they announced it during the third quarter. Yeah, they already announced it, right? I think officially wise it will come in the usual, right? So they already announced it, like officially, that they said they will continue, right? So I don't think they will delay this. They will definitely give it to you. I'm not sure of the when exactly would they say that okay, this will be given on this date, right? But they already announced it, so I think you could expect it at the usual time when you get your dividends, right? So we already really put it in really that the fourth quarter 2025, and then first quarter, second quarter, third quarter 2026, there will be this additional 6 cents. And how much will this impact the DBS share price? I think it's already been priced in, right? This additional step up dividends has already been priced in, so I don't think there'll be much impact to the DBS, to their share price per se. Yeah. Let me go and double check again when. I don't think, yeah, they will probably announce it around the same time as they did the last one. So you'll come in together with the ordinary dividend as well. Yeah. So when your ordinary dividend is announced, and this extra 6 cents should also be included in it, because it's a step up, right? They don't it's not like it's a special dividend like the capital return dividend. Yeah, let me try to take on one more question since it's about the US market. What does the Venezuela event mean for US markets, the oil market? Yeah, not so sure about oil market, but for the US market, it wasn't really impacted, right? We saw some move towards the gold and silver because of safe havens. So it did jump a bit. But I think the main sectors that will probably stand to benefit will be the defense sector, right? As always, whenever there's any kind of conflict, defense sector will always benefit. And then also, some maybe some of the oil refiners, because they are talking about trying to US will step in for the oil in Venezuela, so they will need refiners to process the crude oil from the heavy crude oil from Venezuela. Yeah. So I don't think there's much impact on the sectors that we do cover, which is mainly tech and the banks. Yeah. And also, Tesla as well. Yeah. So the Max 7, I think will not be impacted a lot, but impacted much at least from this Venezuela event. Yeah, okay, I think that's also, yeah. So I see quite a few questions for Paul, but he's not around, he's at an event. So if you can, do put it in our P3 community, and he will look through it and then get back to you. Yeah. Thanks. I'll hand it over to the rest of my colleagues.
All right. Thank you, Glenn. So I'm going to answer one question that there's a question that asks, Meta is now below its intrinsic value. So what is your opinion and opportunity to buy? So when it comes to Meta, I will leave it to Serena. But the question also asks whether this applies to Motorola and Microsoft as well. So first of all, when it comes to Motorola, we apologize, we don't really cover Motorola, so we can't really say, can't give you a comment that, yeah. But when it comes to Microsoft, my opinion is that yes, it is true that the share price of Microsoft has declined recently. Well, one of the reasons that I think is because of the sector-wide factor. Well, recently you have this, at the beginning of the November, we have this AI bubble concern, Michael Burry, and all of those sort of AI things. So Microsoft as well, since it is a software company and the biggest one at that, so it is also was affected, and there was slight decline in Microsoft share price because of that. So it would mostly because of the concern from the market when it comes to AI bubble. But if you look at it, when they released the result at the end of the October, their earnings result, there was nothing really that is that critically concerning. Microsoft, probably when you compare it with the other software and semiconductor companies in the US, Microsoft by comparison is doing better than most. So their result was doing really well, and the revenue was revised upward. And yeah, so not so much of an issue. It's not so much of any factors that driving their share price. It's more like the sector-wide issue. But if you ask whether the share price for Microsoft, going back to the question whether it is cheap right now, because you're asking whether the intrinsic value is lower. Yes, the intrinsic value in this case, which is the target price, it is lower than our target price. The share price is lower than our target price. So yeah, the intrinsic value is higher than the target price. So it is an opportunity for you to continue buying from our view. And if we look at the PE, forward PE that we have, we think that the current PE is as well is lower than the average 1 year PE that you might have. If you look at it 1 year average, 1 year average for Microsoft is at 29, but because of the recent sector-wide software industry stock declining, including Microsoft PE is now at 27. So it's like at a negative 1 standard deviation, so it's lower than the current average. So if you look at that, just in general, it is cheaper than the average. So yeah. And just to wrap up, we still do like Microsoft, right? It is a defensive stock by nature, and we also still like Microsoft because of the high growth prospect, which is the product, which is Microsoft Azure, especially driven by the adoption of the Copilot, which is increasing in many institutions, right? Which is very wide, sector-wide and all of that. So we still like, so Microsoft is cheap, yes, true. The next question is on the Oracle TikTok deal. So will the Oracle TikTok deal in late December have the stock rebound? So not much is known. I mean, like they don't really, even in the recent earnings call, they don't really talk much about it because they are focusing on the bigger things, which is Oracle infrastructure, the revenue in general. So they don't talk much about TikTok deal. So what we have is what you could read from the news. So yeah, sure, it is not really a new news. It is something that now they just recently in December they signed a definitive agreement. But then again, this news when it comes to TikTok is something that was months ago, right? So people in the market, I think that probably have priced in this TikTok deal in their TP if they even have the percentage of revenue. But honestly, we don't really have the percentage of how much this TikTok deal going to contribute to the revenue as a whole. But if there is that, I think it's part of the Oracle cloud infrastructure, means that yes, through the Oracle would provide infrastructure for TikTok, continue for their US base, for TikTok base, but it is a continuation from what they already did. So whether if you ask whether this would drive the revenue and earnings, I don't think it would Oracle would benefit much from this. I mean, it is, yeah, but if we compare to the bigger revenue, I don't think the increment would material that much to driving the Oracle share price. Because currently, if you look at Oracle, the main problem is not the, yeah, I mean, the Oracle TikTok deal is positive, but we have a bigger problem, which is that recently Oracle share price declined, but that was actually because of the market are concerned about their backlog order, which is the RPO, the revenue performance obligation, which is market thinks that it is superficial because half of their RPO is coming from OpenAI order. And so when it comes to, just recently, 2 months to 1 month ago, people are so afraid of OpenAI circular financing. So Oracle, which is the center of receiving about 300 billion order from OpenAI, for sure, that's why the share price plunged to around 200 US dollar, which is exactly the price level prior to the announcing of OpenAI order back in September. So yeah, because people are afraid that when it comes to OpenAI order, well, one of the concern is that OpenAI is currently only making 20 billion US dollar, but their total commitment, for example, such as their order to the hyperscalers, to the semiconductor orders, right, is about 1.4 trillion commitment as they guided. So people are worried that these orders coming from OpenAI to Oracle is a bit superficial. So hence the share price drop back to the price level prior to them announcing these Oracle deals back in September. So that's one of the reasons of why share price declined. So if you ask whether TikTok deal would turn over this, I'm not sure TikTok deal is big enough to turn over this issue. And then there's also in the recent earnings call, they raised their capex of 50 billion, and that in turn is also another concerning factor. I mean, they did guided higher revenue to the Oracle infrastructure business segment, but if you look at it, that would have impact more heavily in the earnings, so it's not really that much. So yeah, so for Oracle price to really, in my opinion, is that in the next earnings quarter call, we would hope to see lower. I do think that they're going to raise their capex further, but if you want the share price to rally, then the capex raise in guidance shouldn't really be that big. But in return, the market would like to see more acceleration in their revenue because they already spent a huge amount of capex in this quarter and last quarter. So and they haven't yet make a big guidance in their revenue. I think market are looking at that. That is one of the level to for the share price to really need to have increase in guidance for the revenue while their capex slow down a little bit. Yeah. Just go back to the question, TikTok deal, I don't think it would have the stock price rebounding. If it would, then it already did back in December. So that's from me for this Oracle question. I will pass over to my colleague to answer some more questions.
Okay. I'll answer some questions. Suntec REIT, please update current status about it being acquired by the banks and what should shareholders do now? So for Suntec REIT, if you know last month the Gordon Tang, like the group, right? They acquired the manager for about 100 plus million. So we think likely this would be just the first step. So remember last year they tried to privatize Suntec, but it didn't go through. So we think it's likely that they'll try again this year because there's a 1 year period where they can't do another attempt to acquire. So we think it is likely that they will try to privatize because now Gordon Tang and his affiliates, they own like 35% of Suntec REIT. But other than the acquisition of the manager, so far no other updates. So that is just our view for Suntec. Is Takraw negatively impacted from US import ban on the new DJI models? So Takraw is not really affected because they only distribute drones in South Asia, the DJI products in South Asia. So they do not have they do not sell, or they do not have rights also to sell in US. So they are not really negatively impacted by the ban from the DJI models to be sold in US. They sell in only, or rather they sell in 7 countries in South Asia. What's the potential issues holding up Parkway Life REIT? Price doesn't seem to move much, even though analysts put a high target price. So for me, personally, my view is that Parkway Life REIT, after all, it is a Singapore, it's anchored by Singapore Hospital, so it's the portfolio is very strong and very resilient. Its price to NAV, the market is also pricing at 1.5 times. If I'm not wrong, the latest price to NAV is 1.5 times. So market is really pricing in a higher value to Parkway Life because of its very strong Singapore hospitals. And from a REIT perspective, Parkway Life REIT, in my view, is it's not very attractive because the yield is roughly 4%. I know upcoming over the next few years with the new rental or new lease that they signed, post the Project Renaissance, their rents will go up and likely yield will increase slightly, but still the yield is still trading relatively low as compared to other REITs at like 3-4%. So imagine if the share price continues to rally, the yield will be even lower. So Parkway Life REIT it's not really trading like a REIT in my view. So it's quite hard for it personally to see the share price really running, because as it runs further, the yield will be compressed even more. Then it will make Parkway Life REIT even less attractive as compared to other yield instruments. So that's just my view. But officially we don't cover Parkway Life REIT. But what's the target price for Central Accommodation? Sorry, we don't cover Central Accommodation REIT. But you can let Zane do a TA on that one. Thanks, Zane. Later. View seems to indicate that Keppel REIT with the issue right now is not well placed. What's your view of the outlook in longer time horizon from investors' point of view, especially those who are already holding a stock now? So for Keppel REIT, they acquired the one-third stake in MPFC, the Tower 3. And that deal is actually dilutive. So they weren't given much time to decide. So saw the most recent report, they was given 20 days to decide whether they want to acquire after Hong Kong wanted to dispose them. So the deal is dilutive, but from their view is that it is a very rare opportunity to acquire such a prime asset in core CBD like the Marina Bay there area. So they think that the rents over time will continue to improve, and rents should be stable and kind of improve over time from the limited supply, and they think demand will pick up. So they feel that there is potential to increase rents. So that is why in the longer term horizon, so that is why they went through with the acquisition. Yeah, but in the near term, the deal is diluting, so it doesn't really look very attractive. Yeah, it's just banking on the fact that perhaps long term horizon, like 5, 10 years down the road, the rents will start to kick in. Rather the rental reversions will be very high from the fact that there is limited supply, especially in the core CBD area. Yeah, so that is the bet that they're taking. Uh, in addition to the Parkway Life REIT question, will the new rental payment calculation structure starting from mid 2026 increase a gross rental collection tremendously this year? Yeah, if I remember correctly, off the top of my head, it was like a 20% jump for the revenue itself from the 3 hospitals. Yeah, so it is quite a significant increase in the rents that they'll be collecting. Yeah. What's the trend? What's the trend of RevPAR going forward? Yeah, so for RevPAR, 2025 wasn't that great, mainly because of the very strong base from 2024. So for 2026, the outlook in our personal view is that there are some events that will help to support RevPAR growth. Like there's a rugby sevens, I think that's what it's called, the rugby tournament, as well as things like the Singapore Air Show 2026. So this will support RevPAR growth, and the fact that we still think 2026 likely that international visitor arrivals will likely reach pre-COVID levels. So 2025 it's lagged by the numbers are not up by about 5%, I think. Yeah. So with the increase in international visitor arrivals, we think occupancy at hotels will relatively be stable year on year for RevPAR as well. And for supply wise, it's not a lot of incoming supply so for new hotels. Yeah, so as of now, we are expecting RevPAR to be flattish in 2026. Yeah, not a lot of growth anticipated. Yeah, because the outlook is, in our view, is still quite muted. Yeah, but there are some events, like I mentioned, that really supports it, but I cannot compare to 2026, of course, where they are like the major massive events like Taylor Swift, Coldplay, Ed Sheeran, and many others all in one year. So yeah, that one is uncomparable. Who is currently at DDC REIT? What is the outlook for this REIT? They were very upbeat during the SIS organized site visit conducted at the end of November last year. Yeah, so we don't cover NTDDC REIT officially, but we do follow it a bit. But the outlook for this REIT is that our view is that NTT, that the Singapore portfolio is, I mean, it's just one data center, but in Singapore, because the tenant, one of the major tenants there is the sponsor entity. So actually the rents that they are getting is we believe is way below market. And it's slightly different from Keppel, where Keppel District, where they like they had 30% positive rent reversions because when they renewed the lease, and then they managed to get that very high positive rent reversion because the previous rents was significantly below market. But for entities case, we think this REIT's case, we think that the lease for this particular lease for the sponsor, it is unlikely that it will jump very high. And yeah, currently it's on a yearly renewal, if off the top of my head. So we don't think that that the rents can jump a lot for that. Yeah. Yeah, other than that, also we think for the rest of our portfolio, we think rental growth also relatively muted in our view. Yeah, so but we don't officially cover, so we don't have a target price or a recommendation for that. Yeah. And but for them, they do have a very strong pipeline of data center assets. I think this year they are looking to acquire some data centers in Europe. So you can keep a lookout on that for any accretive acquisitions that they might have. Yeah. Yeah, I think that's for me. I know to the colleagues for now. Thanks.
Hi, I'll answer the question. Sorry. Yeah, I'll answer the questions about Meta. And by the way, Happy New Year, everyone. So the first question would be what's your opinion on opportunity to buy? I mean, for Meta, we still have accumulate rating because of two main things. The first one is because we do see the core operation, which is the ad business, still remain pretty strong. Even with the help of AI integration on Facebook and also Instagram, but we also do see pipeline is growing pretty significant, especially for Reels. And secondly, is because currently we do see the AI investment is I think Meta AI investment is very focused to boost the core operation. So recently there's some news that they will be less focusing on less profitable kind of like experimental segment like metaverse. So it seems like they're reallocating resources and kind of spends money on like scale AI or like maintenance or like data center. All of this is the ultimate goal is to aim to enhance the ad ecosystem. Yes, we do see the acquisition costs quite a lot of money, but like I said before, we think Meta CapEx still remain quite reasonable considering the first thing is the revenue they can generate in a year, and the second thing is that the current cash flow still remain pretty strong. And then there, I mean, followed by the questions. There's a questions about the takes on Meta maintenance deal. So far I do think that is positive news because the first one is saying I think it will be much faster for acquisition compared to they build it themselves in the entire AI agent themselves in-house, considering currently the competition is quite intense, especially for like Gemini, ChatGPTs. The competition and so performance are pretty strong. I mean, even for Google, the AI solutions demand is pretty strong as well. So this is why I think that it's quite reasonable that Meta actually proceed with the acquisition. They have been talking about how they want to utilize like WhatsApp business to actually help with the ad efficiency and kind of like automate to use the AI to kind of like automate the entire like ad setup for the advertiser. With Meta's technology, they will be able to do so by integrating with Meta LLM, which is Llama. The acquisition, I think it should positively impact the revenue once the whole ecosystem became more mature. But like I mentioned that it's entire ecosystem, some of the risk might comes actually with the execution. So similar like scale AI, like I say, the technology will be helped to boost the core operation, but it will be very behind the scene and it will take some time for the integration so that you won't be able to see that how much of this acquisition actually helps to generate the revenue. But then I mentioned that this technology actually helps with the cooperation. And so far, based on the earnings and all, the integrations still see pretty efficient. And then another thing is Meta do have this LLM training, but the current thing is they is slightly falling behind. But I think with all the user base and all, should be able to keep up. And then Meta's AI will be able to make sure that they can utilize it and even monetize it more efficiently, so that the ecosystem will be very merchant, which I do believe that this is the ultimate goal for Meta as well. So yeah, and that's for let me see if there is another question. Yeah, I think that's all. I think I'll pass the time to my next colleague. Thanks very much.
Yeah, thanks, Serena. I'll take on the remaining questions for my end. Yeah, I think there's some questions to Paul. But I'll just try to answer because he's at another event. There's some question. What's your AI forecast target, high and low for STI, oil, palm oil, and gold? Yeah, so yeah, I can't answer the oil, palm oil, and gold portion, but I think for the AI technology portion for the STI, yeah, we are overweight on the technology and AI hardware sector in Singapore. Mainly because if you talk about the contract manufacturers, as well as semicon players in Singapore like UMS, Franken, and AEM, uh, their growth is still supported by strong demand from uh, semiconductor equipment players. For example, ASML, Applied Material, as well as Lam Research. And we are overweight them because we do see an acceleration of wafer fab equipment spending at the second half of this year itself. Because this is being provided by the guidance from the equipment makers when they have conversations with their customers, which are mainly the foundry players. Yeah, so we do think that in terms of timing wise, it will start to accelerate in the second half of next year. So the first half there may be some slowdown in terms of timing issues. For example, the ASML's high-NA EUV taking some time to ramp up. And also maybe for TSMC's CapEx spending for the first half of this year, because of the CapEx spending cycle, it may slow down a bit. But our overall view for the technology hardware sector is still positive. Yeah. There's a question, would you share the buy list, please? Not very sure what you mean by the buy list, but if you're referring to the kind of coverage list that we have in terms of our recommendations to buy, hold, or accumulate, then that list can be accessed from our morning note newsletter. So at the bottom of the newsletter itself, you can see our coverage list. Yeah. There's a question, is Franken's situation now similar to UMS current situation with Lam Research? Ordering schedule change. Will UMS situation improve this year? Yeah. I think in terms of ordering schedule and delays, yeah, I think they are roughly in the same situation, even though the timing wise it's a bit different because for UMS for the third quarter results itself, they are already impacted because Lam Research haven't recognized the revenue. That's why UMS experienced a spike in inventories. There's a 20 million spike in inventories for the third quarter itself. So for UMS itself, even though for the first half of this year itself, there may be uncertainties as in the timing of when the inventories will be recognized. I think our overall outlook, even though we don't cover UMS, our overall outlook is still positive for UMS because Lam Research is still experiencing strong demand from the memory players. And also second half of this year, as mentioned, we will expect acceleration in wafer fab equipment spend. So we do think that will also flow down to UMS revenue growth itself. Yeah. But in terms of the timing wise, first half management stated that they also cannot confirm whether they can recognize this inventory spike in the first half of this year. Yeah. So it may be towards the second half of this year. Yeah. Yeah, so with WeHer's worker accommodations, next question, with WeHer's worker accommodations activities running so well, will this spill over to Central accommodation REIT too? I think for both WeHer and Centron, it's not about one company spilling over the demand to another company. For both WeHer and Centron, it's about the entire worker accommodation sector facing a shortage of dormitory beds. That's why both Centron and WeHer has been experiencing these positive rental revisions in 2025 itself. For example, Centron has been able to experience above 10% or more year-on-year growth in terms of their quarterly basis for their worker accommodations segment. Yeah, so however, for this year itself, we do think that the supply demand dynamics is stabilizing. So we do think that there will be a slowdown in terms of rental revisions growth, maybe from 10% now. This year we may see a slowdown to about 3 to 5%. Yeah, so ultimately there will still be growth, but we do think that there will be a slowdown in terms of the rental revisions growth. So in terms of WeHer's story is ultimately a spike in number of beds itself, 47% increase in number of beds itself, and we do think that the beds will be filled up for WeHer itself. For Central Accommodation REIT, we do think that it is more of a stable story. As mentioned, about a 3 to 5% kind of rental revisions for their core Singapore worker accommodations. Yeah. So that's our view for WeHer and Central. Yeah. Yeah. So, for the geoenergy question and ultra green, yeah, sorry, Paul isn't here, so isn't here today, so we can't answer the view on geoenergy and ultra green. But maybe I can leave the geoenergy question here for some technical analysis. Yeah. Thanks.
Okay, thanks, Iqbal. I think I'll start on the TA. Just give me a moment, I share my screen. Yeah. Okay, so yeah. So first, I think I see in the chat whether there's a question by Steve. Is there any US market update? Yeah. So if you are interested in the US markets, tonight 8 to 9:15, I'll be doing a live TA webinar. So if you have any questions, feel free to join, and I can do a live sharing. Yeah. So first question is on Everglory. In terms of the chart, I think it's quite positive. Overall, it's an uptrend. Recently, mid of December also broke out this cup and handle formation and also above the 75 cents resistance. So I think for now, strong bullish candle the day after Christmas, and then just I think probably is doing a bullish flat consolidation right now. I would think support is around maybe the 10 MA, this red line around close to about 78 cents for that. So I think I expect some sideways consolidation, some low volume after this high volume bar. And afterwards, I think there's likely to be a breakout of this 82 cents afterwards to continue the uptrend. Yeah. So I think for Everglory, the chart is quite positive. The next one for SATS, the chart is quite strong as well. So since breaking out this around 352 resistance, also continue to show strong price action. Currently a bit of a sideways close to about 383 resistance, which is previously a swing high back in November 2024. So I think with that, probably some consolidation right now, but I will expect the uptrend to continue. Once it gets past this, the next key resistance will be the previous double top around close to $4. Yeah, so for SATS, I think is likely to continue the uptrend. The next one for Hong Kong Land. Yeah, for Hong Kong Land, currently, I think it looks like a bit of a range, sideways consolidation. Short-term wise is still positive as price generally still holding support from around the 20 MA level, which is this yellow line, just slowly inching upwards and going to a bit of a sideways movement recently. Key support on 684, and resistance mostly around about 715 to about 730. Yeah, so I think for the short term wise, maybe some continued sideways movement for now. Yeah. Then next one, SIA. Yeah, so for SIA, I think looking a bit better, but I think might be still a bit slow. Good thing is that to the recovery above this 640 level, which previously there was a breakdown. Now the key is to see whether 640 can hold as a support if it does affect this over here. If it can hold, then maybe some slight further upside. But for now, I think there's still quite a lot of resistance from the October to November period over here, around 650 and then around 660 and 665. So that's the few key levels in the short term as resistance. So overall, I think maybe still like largely quite range bound as we've seen mostly since August. And the key to see whether it can continue to move outwards to see whether 640 can hold as a support, which is around the 10 MA level and this key horizontal level. The next one for Keppel, I think the chart is very nice. So for Keppel, I think overall is a very strong uptrend. So in this uptrend channel, it's also in terms of technicals, I think I chose this as a top pick for first quarter in terms of technicals. So in terms of the chart, you can see that overall uptrend channel, shorter term wise, since November is consolidating in this bullish flag. And then today, I think there's a breakout of this 1038. So that's overall still very positive. I expect this uptrend to continue. Target level could be somewhere around close to $11.92. So this is taking the height of this flag over here and projecting onto the breakout point. Then we derive this target price. So hopefully it can reach the uptrend channel resistance again. So I think for Keppel, still very strong uptrend, and I think we'll likely see a continuation upwards. Next question is on WeHer. Okay, WeHer, I think the chart is looking a bit better. Also, I think one thing is it broke out of this consolidation, wedge consolidation in mid-December over here when it got above 72.5 cents. So currently it's a bit of a sideways in terms of the short term wise, still okay. I think just some slight consolidation. As long as it can hold this, I think as long as it can hold this breakout level at 72.5 cents to about 73.5 cents in this area, then we could expect some upside to retest the previous resistance about 78.5 cents. So for now, it looks like a bit of a consolidation, but it's looking better from this consolidation. So maybe some sideways, and if you can hold as support around 73 cents, then maybe you can expect some upside to test the previous resistance, like double top here. Next one is Sembcorp. Yeah, for Sembcorp, I think similar kind of chart to SIA. So managed to rebound above this like 596 breakdown level. And then for now, maybe some resistance about 613 to about 625 this area. Previously, there was some resistance from these levels. Yeah, so in the short term wise, I expect some range bound consolidation. Probably resistance when it tests these previous levels, and then support will likely hold from these recent short-term levels, like around $6 could be the support in the short term. So I expect some range bound for Sembcorp. Next one is on Link REIT. Yeah, for Link REIT, I think in terms of the price action, it's still looking a bit weak. So just still very range bound after the sell down, just haven't picked up in strength. Just moving sideways. So I think will most probably continue consolidating sideways in the short term. So $34 is probably a support near the swing low, and then there's also this uptrend support line over here. This line is quite important to maintain the overall uptrend. So I think for now, it doesn't look like much strength yet. Probably sideways between 34 to about 35.50, I think. Okay, then next one is Sheng Siong. Yeah, for Sheng Siong, I think overall is still quite positive. So it's a uptrend. And then recently after a rally, I think it's been just sideways since mid-November. Good thing is that support is holding around this 259 previous level, and recently in terms of the price action, shorter-term price action is starting to gain back some strength. If we break out this 263 range over here. In terms of the weekly, also still very positive as well. So we can see on the weekly, the 10 MAD straight line on the weekly is a very strong support level, and it continues to hold as support. So overall, the structure is still intact, and I expect price to retest this 273. And then afterwards, most likely we can see a breakout of this like bull flag consolidation between 259 to 273 now. So I think Sheng Siong, the uptrend is still quite. Next one, Comfort. I think Comfort is still very much sideways, not much movement. Could be looking at slightly better after price trying to break out this short-term downwards resistance line right at 147, but I would expect quite a lot of resistance upwards, like 149 to 151, still quite a bit of resistance. So in the short term wise, most likely quite sideways, I think. Yeah, then the key now is to see whether 147 here can hold as support to support some increase in the price upwards. And for CSE Global, I think the chart is quite strong as well. Overall uptrend, and then recently, I think there's a breakout of this range consolidation. So generally between like 94 cents to $1.01. So if you take that projection upwards, the target could be at $1.08. So for now, today is still holding the breakout. I think as long as it holds the 5-day MA as well as around this $1 mark, then we could possibly expect the uptrend to continue for CSE Global. Then for CNMC, I think the chart is slightly weak, just quite sideways over here. So generally between like $1.04 to $1.16. Then no sign, no signs yet. Generally very range. So I would think this level 98 and around 98 cents is a support level that needs to hold. If not, we could see some downside towards close to 89.5 cents. This swing low over here. Yeah, so still very much range bound. No trend yet. Okay, next one is on ST Engineering. ST Engineering, I think it's overall still an uptrend. Currently, I think still consolidation. Yeah, but the signs are positive as a key resistance around like close to $8.88. Then the good thing is that can see the key swing lows over here, as well as recently 807 is forming higher swing lows along the way. So that's still positive. I think it's still just consolidation. Today, let's see where they can try to break out this 866 level with slightly higher volume. Yeah, so overall still positive, slight consolidation. But I think once it can break out this 888, most likely extension of the uptrend for ST. Okay. Next question is on CDL. Okay, CDL is another good chart. So CDL, I think overall it's been on a very strong uptrend since like April last year, and then hit about $8, this horizontal resistance, and then the good thing is that it formed a very consolidation over here on low volume and resistance, and then afterwards today we see a increase in volume when accompanied by the strong candlestick over here. So I think that's good, and most likely we see extension upwards towards the next level of resistance, which could possibly be around 865 if you look at historical levels, and then next one is around $9.10. Yeah, so for CDL, the uptrend is still quite strong in the price action. Today is a new higher high as well. Next one is Sun Power. Yeah, for Sun Power, I think Yeah, for some power, previously the chart was quite nice, so it was a like ascending triangle breakout. Today there was a big gap down, high volume as well. Not sure why, but in terms of the short-term levels, today tested the 100 MA level, this blue line, as well as the 47 cents, which is this horizontal support level from end of October to end of November. Yeah, so we might see some support hold here in the short term, but probably resistance will come in maybe somewhere around 50 SMA, around 53 cents this green line. And then if it does retest this 55 cents will now be a resistance. Yeah. Then the next support below 47 cents, I would think is 43 cents, this next swing low level. So some power, should be quite volatile in the short term after this gap down and maybe some rebound, and then afterwards could do some sideways, I feel. Okay, next one is on HBBD, which is the Alibaba SDR. So for Alibaba SDR, I think it's could be trying to reverse upwards. So since the pullback in start of October, we managed to retest this previous horizontal resistance area like 473, and it hold over here. And these 2 days is looking better, trying possibly breaking out this downtrend resistance line as well. So in the short term wise, I think there could be still some resistance about 510, which was previously this area where price was consolidating in. So 510 to about around 536 over here. This area could still have some resistance, but I think now to watch will be to see whether it can start to form higher lows. So especially if it can hold support above this 490 range, as well as some of the short-term moving ranges over here, then we could possibly see some rebound from this pullback. Yeah, so in the short term, I think it could be positive if can hold the supports, a higher low support, and then we could see some rebound afterwards. And next one is HPCD, which is PetroChina SDR. Yeah, for PetroChina, I think the chart is still, I think the pullback is still ongoing. Since the breakdown of this range between 288 to 306. Then price did some rebound after testing 263. Today, price still down, and I think we could still see some sideways movement. Yeah, from this pullback. I think key support to watch maybe around 260 level, this swing low, as well as there could be a uptrend support line over here as well. So that's one support level. Next one below around 252, which is this horizontal level. So for PetroChina, could be still seeing the pullback in effect. Could be still just moving sideways for now. Next one for Genting Singapore. Now for Genting Sing, I think nothing much for now. I think overall should be a range bound between like 71 cents to 74 cents. Yeah. Okay, then there's some US counters. First one, Robinhood. Yeah, for Robinhood, I think overall could be doing like a bit of a correction, like a 5-wave correction. Like here is the first wave, then the second wave rebound, third wave, fourth wave, and then this could be like the fifth wave. So a bit of a lower swing high, lower swing low. So to see whether it can hold the 102 support, this will be important, this swing low. And there could be this upward support line over here. So in the short term wise, 107 and then 102 could be the support. So if this holds, then afterwards it could do some sideways. In the short term wise, price action is still a bit weak. As overall is you can see lower highs, lower lows, and then short term wise below the 5 and 10 moving averages as well as 20. Yeah, so resistance wise, maybe like 118 to about 121. Yeah. So I think we could still see some slight pullback to come, slight pullback or sideways in the short term for Robinhood. Next one, Palantir. Yeah, Palantir in terms of price action is still a bit weak recently. I think in terms of the charts, Overall, 187 is a very strong resistance that price is unable to get past since November, like over here as well as here. And then recently you can see also break down below 177. So around this level, 177 to about 184, I would think is the current resistance. Then short-term support-wise, next one is around 163, and as well as afterwards is around 149. Yeah. So I think in the short-term wise, if it does retest like 177 above, there should be some resistance. And then if it goes down below, it will probably be support again. So it'll probably be a volatile range, I feel. Next one for NVIDIA, I think the chart is looking better after 22nd December. So over here, previously it was like in this range between 171 to 184. And after 22nd December, managed to break out over here with a large bodied candlestick. And then just moving sideways. So I think the key is to see whether 184 can hold as support. If it does backtest, if it can hold, then most probably we see some upside. In terms of shorter moving averages, it's around the 10 MA and the 20 MA level. This area is important to see whether it can hold as support along this horizontal level. So in the short term wise, I think could be a bit sideways. 184 should be a support. Then resistance could be 195, which was this high volume day after the earnings gap up. 195, yeah, so could be a bit sideways. Then above 195, the next key resistance at around 202, 203. Next one for AMD. Okay, I think AMD is quite sideways as well. So there's the key resistance to watch with 225 over here. Is a bit of a range currently between like 200 to 225. Tested the resistance on Friday. See whether you can try to get past it. You can break through, then I think the next key level will test around 240. So quite range bound for now. And 240 next resistance and followed by 263. And support wise in the short term, I would think it's around this 270 about there, this consolidation, this very tight consolidation last week. Okay, next question on First Resources. First Resources, I think in terms of the short-term price action, nothing, no signs yet. I think it just range bound. So some pullback since the highs, 223 over here. Then otherwise, a bit of a weakness. As long as it remains below 212, there's some weakness where this was a horizontal support level breakdown that has met resistance, and then support is around 202 for now. So just quite range bound, I feel. Below 202, then the next support are 198. Okay. So I think nothing much for First Resources now. Next one is on Samudra Shipping. For Samudra Shipping, I think it's very strong. Overall uptrend, then there was a breakout of this 104 resistance end of December, and price did a rally upwards, and possibly some profit taking right now. So I think in terms of short-term support, what might come from the 10 MA. Now is about 110, as well as this gap 110 around there as well. So I think that will be a support, and probably maybe some sideways, I guess, in the short term. Yeah, with resistance from this swing high 123. Yeah, so probably possibly some sideways in the short term. Next one is on CATL. Yeah, for CATL, I think let's see, it's mostly range, but some positive signs is that price is forming higher from this range. It managed to break out of it like 490, and then resistance trying to support over here, and currently is testing the key resistance around 520, which is this previous breakdown level in October. So now this is a key level because there's a downwards resistance line as well as this horizontal level. So I think let's see whether it can try to break out. If it can break out of here, then I think we might see some upside towards close to about 560 or 580 again, this area. Yeah, but for now, still range consolidation for now first. Yeah. Key is to see whether 490 must continue to hold as a higher low. If not, it might reverse down. Yeah. So just still range bound and see where's the direction of the breakout. Next one for DBS, I think overall still a very strong trend, 52-week highs. And overall, I think the larger channel could be within this channel itself. So in the short term wise, a bit small candles over here, but still very strong after the consolidation. And then I think we could see some upside, maybe to test the upper Bollinger Band. That's around 57.25 right now. Yeah, so still a very strong uptrend for DBS. Next one for WeHer, not WeHer, Joe Energy is Propnex, sorry. Yeah, for Propnex, I think could be starting to do a bit of a rebound. So it actually hit the head and shoulders breakdown target level at around like 183, and then did a sideways, and today is breaking out. So let's see on the weekly time frame, some resistance could be around 203, the 10 MA level. Then afterwards around 206. 206 was the previous breakdown level here. So I think we could see some short-term bounce to retest some of these previous levels. And then afterwards, we could see some sideways afterwards, after this pullback recently. Okay, next question on SMCI. Yeah, for SMCI, the chart, I think, is back at this horizontal support level around $29, which was previously support over here. So it could do some sideways over here, but overall the chart is still quite weak. And some resistance around 31 to 32 over here. And then afterwards, it's around 35, 50. Yeah. So probably some range consolidation right now. And in terms of weekly, there's 5 and 10-day MA resistance, and then daily wise 20 MA so above. So we may continue to see some sideways movement. Yeah, 29 is important to hold. If not, there could be some downside maybe towards 25, 50 next. Next one is RHB Bank. Yeah, for IHB, I think overall still a strong uptrend. Currently just moving upwards, and starting to go a bit range, kind of a bit of a range. If it cannot hold the 10 MA, which is at 773, then it might do a bit of a range bound for now. Then 765 might be the support, then followed by 755. Yeah, so I think it could be starting to do a bit of a sideways consolidation for now. But our overall uptrend is still quite strong. Next one is Cycom. For this, volume is quite low. Then for now, in terms of the structure, generally still bullish structure. Because we still see higher swing lows along the way. Around the 20 MA is the moving average support, and resistance around 145. So with that, if you can try to break over 145, then we could see the uptrend, the short-term uptrend continue upwards. And next one is on REIT. Yeah, for REIT Global, nothing much, just quite sideways, I think, for quite some time since May last year. Yeah, so I would think we might still see a consolidation with resistance at around 30 cents to 31 cents right now. The next one is on Tiong-Un. For Tiong-Un also looks like nothing much happening right now, just range movement. Largely between like 76 cents to 80 cents the area. So I think nothing, no trend for now. Probably just continue range. Then next one, Tianjin Pharmaceutical. For this, okay, overall it's an uptrend. So currently pullback, we might see some support around this retest of this range at 322, probably is support. Yeah. Next one is RH Petrol Gas. For RH, overall is a downtrend. Then today is testing this breakdown level as well as this swing high resistance, 16.2 cents. There might be some resistance still. So let's see whether for this whether you can hold the support around like 15.5 to 15.7 cents the moving averages here, as well as like these recent some higher lows recently. If you can hold support here, then try to break out this resistance again, then the next key level will be somewhere around 16.7 cents to 16.8 cents here. That's for RH. Next one, 9988 is Alibaba Hong Kong. So for Alibaba Hong Kong, similar to the STR explanation just now. So we did a retest of this 143 previous horizontal resistance, found support. Today looking better in terms of the chart where there's a breakout of this downwards resistance line as well. So I think some resistance could still hold at this consolidation area 154 to 160. Then the key is to see whether it can form a higher low recently, like around 148. See whether it can find support around this level and try to go higher. So for now, I think it's just looking better, but it still needs more confirmation. Then for Tencent, 700. Tencent overall, trend and moving into just a range. Good thing is that it's still holding support above the range at 595 to 606. So for now, I think let's to see whether it can hold this 615 level as a support. Then whether it can hold above the short-term moving averages. So for now, it's the same as Alibaba. Need a bit more confirmation. If you can hold higher low, then we can maybe see some upside towards like 635 and even higher levels like 660. Next one, Q&M. For Q&M, overall, it's still a nice uptrend. So overall, could be trading in this channel that recently retested the 55 cent swing high. Just moving sideways for now. So I think just could be moving some consolidation and resistance. Then support could be around 53.5 cents, this swing high as well as the moving averages over here. Then if you can hold a higher low support, then I think we could continue to see higher highs being formed afterwards. And next one is IX Biopharma. For IX Biopharma, I think chart is good. After this range consolidation, I think it's like a bullish flag between 11 cents to 13.6 cents. You see there was a rally. So with that, most likely it's a new higher high, and most likely I think we could see some support along the 5 MA currently. It's currently the 14.1 cents. So I think, yeah, 14.1 cents to maybe 14.4 cents could be the current support, and then price might continue to trend along the 5 MA currently. And then next is Nam Chong. So for Nam Chong, I think overall it's uptrend as well. Then recently broke out this like 90 around 89.5 cents resistance level to test this trendline resistance. So some resistance at 98 cents. So we could see some slight pullback over here, but I think support is should be still strong around 94 cents. Yeah. The 5 MA area. Okay, next one, Food Empire. I think it's still some range consolidation going on. Okay. Yep. So when price feel this price gap over here 236, found support, then be a range, some resistance 245. See whether can today is trying to break out. These 2 days is trying to break out this 245 level. So see whether can hold over here, and next result upwards like around 252, 251, 252, and then followed by around this 263 around there. So for Empire in the short term wise, trying to reverse out up from this range. Yeah, see whether 245 can hold around there as a support. Then short term resistance around 251. Next one, Sunly Environment. Yeah, for this overall uptrend, then strong bullish candle with volume on last Friday. Okay. Yeah, I think with that also recently recovered above this 331.5 cents level over here. So for that holding range, and then Friday was a strong candlestick. So with that, maybe we will retest this 36.5 cents high volume sell down day. And afterwards, it might do some consolidation sideways afterwards. This one, GRC. Yeah, for GRC is a strong momentum right now after breaking out. In the short term wise, I think it could just still find some support along the 5 MA level. And then for oil tech overall still pull back, and then recently gone a bit sideways. So for now, I think still should be quite range bound. Unless you can try to break out this 72 cents level, then we might see some further rebound upwards. After 72 cents, the next key level is around 76.5 cents and 82 cents. For now, still most probably sideways. This one is on Rex, Intel, MedTech. For Rex, overall it's a downtrend, then recently some rebound. Yeah, so for now, I think maybe the resistance for now maybe 14.8 cents to 15.2 cents. Yeah, in terms of the short term wise. Yeah, if it does retest on these previous levels. For Intel could be, I think could be a ascending triangle in the week. So the resistance like 42.50 cents. Then there might be this upward sloping trend line over here. So I think for now, most likely we still see consolidation. Yeah, for the time being. Then the very short term wise, Friday broke out this level, $38. So if you can hold above 38, that would be positive. Then for MedTech, Short-term wise, still coming down, then is broke down the range, 12.3 cents, then became resistance. Then short-term wise, just range over here. So I will still expect some sideways movement, 11.7 to 12.3 cents. Next one, Marvell and Sunny Optical. Yeah, for Marvell in terms of the chart, it's a volatile uptrend. Then recently, I think held or support $81 over here, this level, and some sideways, and Friday broke above this 87.40 level. So if you can hold, then we might see some recovery towards the next key level area, like 93 to 94 area over here. Yeah, for Marvell. Then for Sunny Optical, for now, I think it's quite a range. Most likely is a range between the recent swing low, like around 63. Then resistance should be around $70 for now. So I think it's still quite range bound. And then for China's Sun Sign, for this, I think it's overall it's a uptrend. Most likely still in consolidation phase right now. So yeah, for now, yeah, I need to see whether this trying to break out this range, like 79 cents, whether this area holds like 78 to 79 cents. If you can hold as support, then we might see a rally, try to rally towards 83.5 cents resistance again. Yeah, if this fails, then it might come back towards 76 cents. So just still very range, largely range bound since mid-November. Okay, any thoughts on SIA Engineering? Yeah, for the technicals, in terms of SIA Engineering, overall it's an uptrend. Then recently, trying to retest this breakdown level at 360. So there might be some short-term resistance over here. But for now, there's a bit of a higher low. So let's see whether it can hold this 352 over here. You can hold like a range and try to break out 360 again, then we might see some higher levels like 368 and above for SIA Engineering. Yeah, for Riverstone TA, I think it's okay. It's like maybe an ascending triangle, higher lows along uptrend support line with resistance mostly around 90 cents area. So I think let's see whether I can continue. For now, support maybe around 87 cents. If we can continue to find support, higher lows as well as hold this horizontal level, then maybe we could see higher highs come. Yeah, then the next key resistance around 93 cents above 90 cents. Next one, Bumi Tama Agri. So for Bumi Tama, I think in terms of the chart is a bit weak. So there was previously an uptrend. And over here, price failed to hold the breakout at 148. And then afterwards, another signal here was a breakdown below 137, high volume. Retest over here found resistance. So some two breakdown levels. And then this could be possibly a bearish flag over here if it breaks below this 130 level. Yeah. So if it breaks down here, then I think price might come back towards 123 to 119 area for Bumi Tama area. Okay, I'll take two more questions since it's about close to one. Next one, Meta Optics. Yeah, for Meta Optics, I think overall it's still an uptrend. Then in the short term wise, after this strong rally, there was a bit of a consolidation that took place. And yeah, so I think for now, some resistance around 133 to 137. But I think strong overall is still quite strong because the rallies have been seeing higher volume while the pullbacks are quite low volume. And today, the last 2 days also quite high volume when the company is strong candlesticks. And yeah, so I think overall it's still positive. I think we can hold at this level. Most likely we'll see a retest of 149 days swing high again for Meta Optics. Okay, the last one I'll do Geo Energy Resources. Yeah, for Geo Energy, I think price action wise is still a bit weak. So there's been some breakdowns like at 45.5 cents, and then it's 43 cents also broke down recently. That would be the short-term resistance. I think with that, price might continue to find resistance along these moving averages like 20 MA. Might come down towards like the next key stronger support will be somewhere closer to 39 cents, 39.5 cents level. Yeah, so that's for Geo Energy Resources. Yeah, so I think that's all for the TA today. I see that there's some questions for Paul, but he's not in today. He's at the event. But feel free to leave your questions in our P3 community for him. Yeah, then I think that's all for today. Thanks for all your questions and attending our webinar. Hope to see you all again next week. Yeah. Thanks. And have a good week.